Hello and good afternoon. I welcome you to today's Trading Spotlight webinar here together with Admirals. It's Wednesday. It's the 16th of August, 2023. And what we want to cover today is the US market opening after a very interesting release. We've seen, probably you are already aware of that. Target just released earnings where I think solid was quite good, to be honest. But the guidance for the next quarter, or for the for the current quarter, disappointed a little, and that's interesting because especially after the recent drop lower, so there has been some developments in the recent past in terms of regards to uh, Target and their business in general. They were in the media around developments from a let's say rainbow perspective. There were some very emotional developments going on in their stores with clients, customers, and also there were some threats in terms of potential bombings, if I'm not mistaken. And the stock sold off quite sharply, as we will see in the upcoming chart, or upcoming minutes with the charts. And but we never really bounced. And yesterday we broke quite well. We didn't broke lower, but there was a very weak close into the earnings, which were just released. And so the reaction itself was very interesting. Right now, strong beat to some extent, at least for the current quarter, or the last quarter. The current quarter disappointed a little, and we are gapping up. We see a very elevated volume, but we are spiking into a strong zone of resistance. And I have to be honest, I consider Target to be more from the short side, more interesting with a short bias, and so far the price action underlines that to some extent, and that's exactly what we want to look at and how to interpret this. It's not just that we are trading it, but also in addition to that, we want to make sure that you understand why this stock is of interest for us, because the whole story around this, well, very interesting, but that's not the reason we are trading it. And in fact, there's a checklist I go through, in fact, and that's exactly what we'll cover in the upcoming 30 to 45 minutes. Very important to note, we're not playing games here. That means, like, there's risk involved when trading, and we plan to trade. It's real money. It's my money, and we plan to look for trading setups and think about trading these setups. If you see me doing something, formulate a game plan, execute a trade, please be aware that I take all risks here from my end, but everything I present to you is purely educational and purely from an informational perspective. It's not something like an advice, financial advice. Please don't misinterpret or misunderstand anything I say. If you do a trade based on my thoughts, you're welcome to do so, but you have to go through your own, to some extent, due diligence. In fact, find out whether CFDs, leverage products, are suitable for you as an investor. And if you take a trade, you take full responsibility and risks yourself. So you can keep all profits if they are profits, but you will also keep all losses. So just to make I'm sure that we are all on the same page here. Purely educational content, purely informational content, no trading advice or financial advice whatsoever, what you will witness in the upcoming minutes. The broker behind this webinar series is Admirals, admiralmarkets.com, the website. Feel free to check out the website to check their trading offering. I think very, very competitive offering, especially I'm located in Berlin in Germany, and we usually refer to Admirals as the DAX expert. So very competitive offering when it comes to index trading, but also when it comes to stock trading. And so fully regulated. Again, check out the website for further details. One world, one broker. And you can see it here, your favorite stock at a fraction of the price. That's especially true for physical stocks, for their invest offering they have. You can, well, let's say you have a, I don't know, let me just think about this, like a Chipotle, for example. So very, very expensive stock at first glance. But if you only want to invest a smaller fraction of your available capital, you can also buy stocks at a fraction of their price, and then don't have one share in your portfolio, but let's say 0.5 or 0.3, for example. All details can also be found on the website here. And that's it around the introduction. Let's jump here right into the charts. Trading platform. You can see I have a trade open right now. This is a trade. I don't want to make a topic today. In fact, it's a swing position. You can see it here. As of now, I haven't yet seen the positive feedback, but I'm still like, well, how can I say that? It looks good. That's difficult to say, because if something looks good, then something might go wrong. But you can see it here. It's Veronis. It's a software company. It's quite, well, it's not a low float, but it's not such a liquid stock, and it's a swing trade, in fact, and an idea. I'm not really sure. Probably I'm a little too early. That's definitely something to consider. But I think there's an interesting breakout area now forming here, around 31.10 around. And I could imagine, if we are breaking above that level, that we are potentially heading for 32, probably even higher than that. So here in the daily chart, you can see 32. That's the region around the most recent highs, which were marked shortly after the earnings, and it's holding nicely the gap which we've seen there. Hasn't fully closed it, and there's also a clear tendency now for buyers stepping in. So quite beaten down stock. Let me just zoom out here. So quite beaten down. If you look at the highs, which were marked around, that was 21 September, around 72, beaten down, and then there was a consolidation. So the stock traded as low as $15 or something like that, and it's now forming higher highs, respectively higher lows. And as you can see, there's some moving averages I'm using here, which are starting to show that buyers might seem back in control. Now you have a catalyst with the earnings, and so far, as you can see here, there's a dotted line. This is the 5-day moving average, 5-day. So you look here, it's a 30-minute chart. Obviously, this is not a 5-day, but this is the EMA 65, in fact. So 6.5 hours. This is 13 candles per day. 13 candles multiplied with 5 is 65. So the EMA 5 on a daily is the EMA 65 on a 30-minute. And it's very interesting to see that it's holding so far. It's not pushing higher, but it's holding that. It's surfing this. And so I could imagine that there's probably a potential breakout higher rather sooner than later, if we're not dropping significantly below this EMA again, respectively, let's say below, I would say 30.25. This is where my stop is. You might wonder, there is no stop here right now in the chart. That has to do with the fact that I'm manually managing it. So there's not a hard stop, because there's a risk due to the fact that the stock is quite, let's say, illiquid, or not that actively traded, that there's like a flush lower, but there's no real trading taking place there. And thus I want to avoid here to get spiked out that way, but we'll closely manage the price action as long as it takes to finally show positive feedback, or taking out the trade if there's a drop lower. That's the way I manage the trade here. So let's say a little more advanced in this regard. Now, I've already said more than I planned to say. Again, I think my timing is off here. I think I'm too early to the party. I think the clearer signal would be delivered once we break above 31.10. And then I could imagine that there's a quick push up to 32, and probably even a break higher than that. And that's also something, well, I'm currently watching, even though it's not really hot. So far, the price action in the pre-market is 0, so no trades have taken place, and that's why we are focusing now here on our intraday trading. And intraday trading, in this case, we have target already on the radar. And as you can see here, so this is, by the way, the setup. I just want to make sure that we are all on the same page. So you can see, first of all, I have some stocks I'm watching here. So IWM, for example, this is the Russell 2000. I'm watching it, for example, for a potential breakout here on the upside. Let's see, rather sooner than later, probably. So far, it's let's say not behaving so well, probably. That's a good way to put it. So it failed to break above 200 for several times now, coming in. In the current environment, not really taking on further bullish momentum. Let's see whether this changes, but I'm watching it. So I have no position in it whatsoever. I have Roku. Roku was a trade yesterday. Also, I plan to have it from a swing perspective, but then I exited the trade because the price action, especially into the close, I didn't want to take the risk overnight, in fact. But I'm watching it for today. Let's see if it holds above 82, another play. And then I have Veronis in this case for the swing position. But you can see it's nothing more than that. So I make sure that everything is like that my focus remains on what I'm currently watching. So I don't want to have all stocks open I'm currently watching or something, but I want to keep it not just simple, but also very clean and clear. So that I'm not overwhelmed with too many information. I certainly want to know where do we trade in terms of the SPY, the Qs, for example. So the ETF on the S&P 500, the ETF on the NASDAQ 100. I have Tesla open for a longer term position, for example, and just having having it on my radar. But all in all, I want to keep this clean and clear and not have too many stocks here. I usually type up those I'm watching for the day and then take out those which are not of interest anymore for me. I have a 5-minute chart here. This is my trading platform with the mini terminal. By the way, the mini terminal can be downloaded for free on the webpage from admiralmarkets.com. You can get it here on the platforms. There you have the MetaTrader Supreme Edition. I think it's a very great tool. I highly recommend using when, especially intraday trading. Just here. So there's the link. And 5-minute chart. I'm not analyzing the chart here. This is just a rough overview, and for entering the trades, the analysis I do usually, or the research I do, is via TradingView. We will look into the chart in a few seconds here. I have a 30 minutes to have an overview. Where do we stand right now? And I have a daily here. And as you can see, let's zoom in a little. We had a range forming after this sell-off here. So this was these this emotional story, let's say, about these unsatisfied customers, let's say, and they turn around in terms of this LGBTQ, I think, like Pride Month stuff, and we sold off quite sharply. We saw something similar in Anheuser-Busch around Bud Light. You probably have seen the price action there yourself. And I think that was too emotional, let's say, on the downside. And that was one reason why I played here the stock for a bounce. That was one day. And then I kept it on my radar for a potential bigger bounce. The interesting thing was, because I think that from a pure fundamental perspective, even though the overall picture is not like very great, in terms of high inflation, and especially looking at Target as a company which is not in the consumer staples but in the consumer discretionary area to be found, I think. But I thought that this is probably just too much. It's like this is like emotional and not fundamentally based, and that's why I could imagine here a push higher. The interesting thing was, this push higher, this bounce never really occurred. We topped below 140, and then we started here to build this range, holding below 140. And yesterday, closing quite weak into 125, around new yearly lows for 2023 and into the earnings. And that was interesting because I was like, well, let's see how the earnings come in. And if we gap below that level, or, well, probably we are gapping back into the range, and then sell off again due to whatever weakness market participants spot here in this stock. And now the interesting thing is that exactly that happened. The earnings were quite solid. Let's have a look here. I tweeted them a little earlier today. You can see adjusted EPS 180 against 140, so strong beat. Revenue slightly below expectation, but I think not such a big surprise. The earnings beat, I think, is due to the, let's say, cost reductions they've seen, and also getting rid of most of their inventory and not having to be too aggressive in price cuts in terms of getting rid of their inventory. So probably the revenue drop here could have been expected to some extent. I'm not really sure. I think we can consider this to be in line. It's a solid number, I think. Full year adjusted EPS, it's around 7.50, so $7 to $8. Take the middle of this is 7.50, is below what the market was expecting. So still, it seems as if they have trouble from an inventories perspective, and also from a here Q3, so current quarter adjusted EPS, they are coming in below expectations, as you can see. And that is mainly, I think that the explanation I've read was that they are looking at below than expected numbers in terms of sales. However, numbers seem strong at first glance, at least from an earnings perspective. Probably the revenue coming in as expected is kind of mixed, let's say. What I think is interesting is that the market, as you can see it here, is gapping up significantly higher, so 6%. And I have it here. This is my analysis, my chart to analyze the price action. And so you can see those turquoise lines, they result out of this range we were just talking about. And so we're attacking here the lows yesterday into the close, and then we're gapping significantly higher. And you see this spike higher, but we're clearly holding below 137, 138. And so again, I think the stock makes a weak impression on me. So it makes a weak impression on me. And I think this is just like a bounce we've seen now, but chances are high that we are selling off. And that's why I'm more focused on the short side. And this is something you can already see here. Just to explain the line. So these are my potential, let's call them action lines. Probably I have to adjust it a little. Probably we have to get this a little lower, 133. Taking out 134. We're currently facing trouble against. You can see here this orange line respective to the purple line. The orange line is the volume weighted average price. The purple line is the anchored VWAP based on the earnings release. So I want to know what the market, as you can see, they are closely falling together because the volume came in with the earnings release. So no big surprise here. But as you can see, this is my line in the sand. Let's say this is my inflection. I'm making it very, very, very simple in this regard. I'm saying, well, if we hold below, bears on control. We've seen a good reaction to the earnings, gap higher, but we are holding now below the volume weighted average price. Well, what does this mean? It means that sellers are in control. That's at least what I see based on the paid price. And I'm willing to play the short side as long as we are holding below. If we make it back above that level, short is not an option anymore. Still, we have to see for the long side if we can make it above the range on the upside. So this is where we're currently trading, and this is what I'm currently watching now in the pre-market. As you can see, it's very important. We don't have access to the pre-market when looking here at the CFD. In this case, we open with the market opening, Wall Street opening, but we don't get a view into the pre-market, which is why I'm using this external source here, beside the fact that I have real volume here. So this is NYSE volume, where where the stock is traded. And so that's very, very important, because this is also telling me, is this stock of interest for me today? And this is now where we come to my checklist I go through. I have here, I have a preparation sheet, very detailed in this case. As you can see, I have a ticker symbol here, TGT, like I have it in blue. So usually you have it in red or in green. So red is short for the day, green is long for the day, and this is blue. Like I'm kind of like not really sure. Well, let's see. My tendency goes to red, so more short. Then I have the support and the resistance zones I identified. So probably we can probably take out 34, and here, let me just see. Let me just check the chart. Potential target probably yesterday, probably 129. Let me just see. Yeah, probably 129. I think we can here. Inflection based on the, you can see it here, anchored VWAP based on the earnings, which were just released. And here I have the earnings, the news itself. This is very important for me. So I could already here say, okay, it's like, what kind of play is it? In this case, I skip this because usually I say, well, these are my potential earnings play. So I know that once I type it down, I'm journaling my trades. I will say, okay, this is an earnings play. This is the catalyst. I have the earnings saying, okay, this and this and this. And then I say, okay, and now how do I plan to trade the stock? In fact, I would say I'd like to play it for momentum and probably for a drive below the pre-market lows. But this is something we will dig deeper into in a few seconds. So then I have a game plan. The game plan we will focus on in a few seconds. I have a gap here in this case. So I have to update this now. Let me just check it here on my screen there. So what do we have? So 6.52. Very important is the average daily trading volume. This is a number I get from Finwiz. Let me just share this here. So this is also something available for free. I will type it into the chat box, Finwiz. You can see it here. Average volume is 5.95 million. So I want to know how much volume, how many shares are traded per day on average, in this case, for the last 3 months. And the next here is the pre-market volume, which is right now 2.7. And this is now where things are getting interesting. As you can see, on average, I want to see minimum 1 million shares being traded in case of an earnings play. And what you can see here is, like, if you have on average 5.95 million shares being traded a day for the last 3 months, and now already in the pre-market, before the market has opened, we are now seeing 2.7 million. This is like 50% of what we are usually seeing on average here. Well, this is a sign the stock is potentially hot. And the levels which are developed here in the pre-market, as you can see it here, they are of interest for us. So it's not just like the market is spiking up, spiking down, and having some trouble to push higher or lower, and that's it. But it's more like these are levels of interest and are usually levels of interest for institutional players. So because in the pre-market, most of the volume being done right here is done via institutionals or between institutionals here. And that's why I want to have a look here. And I also want to see an elevated pre-market volume. So next thing, ATR, this is the average true range. How much potential, even though it can be multiples of the ATR if earnings were released. And then I have here another column telling me about the short percentage. This is not of interest for us today, but could be if you have a stock which has a high short interest, like something like 25, 30% or so. Upstart, for example, it's a potential squeeze candidate, especially if earnings which are released surprise on the upside. So if you see an initial gap strongly higher, then the market comes in, we see an opening drive, tight consolidation, and you know there's an elevated RVOL, and not just elevated RVOL, but there's also an elevated short float in the stock. It could be that the market sees a short squeeze on the upside, similar, well, not really similar to, but close to what we've witnessed in GME, AMC over the course of the year 2021, for example. That's why I cover this here, and I want to know the institutional ownership. This is also not of interest for us today. 81.9%. You could say, well, if there's a bad guidance, let's say, in terms of stocks, stock XYZ, for example, and institutionals want to potentially get rid of the stock, and there's a high institutional ownership. This could mean that, especially into the open, there's strong selling pressure then coming in due to the fact that there's a high level of liquidity, and that then bounces, let's say, towards the volume-weighted average price or consolidations below that level and not really pushing up to that level, could result in signs of further downside momentum to be expected. So, like, seeing how the market is positioned, and that's probably a good way to sum this up. And so the key component why the stock is of interest for me is the pre-market volume in comparison to the average daily trading volume. You get a very good overview of this here in the pre-market screener, because you can see target is on top of the leaders. And then there's also other stocks. You can see Stone here, or HRB. I'm not really sure what this is. But as you can see, strongest player so far, earnings release, fundamental catalyst, and you have an elevated volume. And that makes the stock of high interest for us here. So even a higher or a similar volume than Apple has right now as a clear market stock. And so this is definitely something of interest for us. Also here, pre-market screening, I will share the link. So you get a quick overview of which stocks to watch. Beside of that, certainly you should be aware of the earnings which are released here. Earnings Whispers, for example, is a great source to get an earnings calendar every Friday in this regard. Every Friday, well, I think 6 p.m. probably German time, Central European time, if I'm not mistaken. You get a very good overview. If the stocks don't appear here, well, be aware to check it out also manually. Sometimes like a BABA ADRs are not covered within here. That's something to probably note. So now we know that the stock is hot. The stock is of interest for us. And so what I then do is, well, I look at the price action. Let me just, what do we have it here? Well, I want to have it look here. And I say, well, my bias is to the short side. So I will plan for the day. I will plan for potential outcomes, visualize what could happen. First of all, if we drive below 134, probably we have to adapt this now because it's now 133 on the downside and holds, and below a VWAP. In this case, it's the average, the anchored volume weighted average price. Then I want to be short out of a tight consolidation, shallow pull-ins towards the volume weighted average price. Target would be around 131, probably lower than that. And I want to play this as a pure momentum drive. So I don't want to hold a position for a swing lower or something like that. That has to do with the overall market. I could imagine that even though there was signs of weakness yesterday after promising start into the week, let's see how the things develop around the Qs, especially around the SPY. But I have the feeling that we are probably about to chop around, and that this is definitely something to keep in mind in terms of place in single stocks. Because if you have a choppy environment, probably bounces happening in the spider, in the Qs, you don't want to be aggressively short target in this environment, because I don't think that it's 100% correlated, but the earnings are not as bad as it justifies a complete sell-off out of the stock. At least not as of now, and once looking at the price action. So that's definitely something to consider. So I want to keep my trading here as or the period I am in the market as short as possible, beside the fact that momentum plays are my place. So this is what I want to trade the stock. Then another opportunity is we could stuff into the open. So that means like we are probably seeing something similar now brewing here with the market opening. So we probably push higher here into 37, 38, but not really pushing above that level. That's not a sign to go short, but I want to see a rollover and a drop below the volume weighted average price. But if this happens, this could be of interest then for us to play the short side. And well, another opportunity is, well, I'm short biased, but that doesn't mean that we're going short, but we are breaking higher above 37, 38, holding. Well, then probably we're about to see a 140 test, the level which we saw in the pre-market. And that's it. So I'm going step by step through potential scenarios, and then I will see how things play out. So we are now about to open. You probably wonder, why don't I have the platform open? So first of all, here we have the chance to trade after 5 minutes of trading, due to liquidity providers only offering liquidity after the first 5 minutes of trading. The reason for that could be, for example, especially if you look at the NYSE stock, something which is very interesting right now, you can see there's now it's market opening. So it's 3:30 right now, and you see there's nothing happening. So no volume coming in. That means that the specialist is right now still managing the positions here, and then opening the book, let's say, to the broad people. You will see this here with a spike in the volume higher than. And now imagine you're a liquidity provider for an O2C product like a CFDs, and you don't have a market to hedge against. like if a market participant is really pushing into, and that's definitely something to keep in mind from a risk perspective as a liquidity provider. And thus you get into the action with a delay. Let me just go to the 1 minute chart. Probably that's also good. And so let's just see how things play out. So 1 minute into the day, still no real trading taking place, and then in a few seconds, I would say probably now. There we go. Now it's the opening. So first print was around 34.50. That's probably also something to here highlight. So it's the opening print of the, and you can see this is very interesting now. 33, around 32.70 around. So we're pushing into this level right now. Let's see if this holds. If so, then it's a potential reason to enter with risking against 33 in this regard. And then just let's see how things play out for us if we get a chance here. What you don't want to see right now with still no liquidity being offered here and the market's still closed is certainly you don't want to see now the walkthrough on the downside. So that's certainly something to be aware of that could to some extent destroy, let's say, the potential thoughts for a minute play. And let's just see how things play out. So low is around 32 now. Probably we get to see a bounce. If we can't make it back above the volume weighted average price, I don't think that it plays an important role right now, to be honest, due to the fact that still the what's in German the word is Preisfindungsphase. It's like the period where price development takes place, let's say. So that's why it's not really of interest for us. Let's just see how things play out here, how things develop, and then let's have a look at or if there's a chance for us to get into the stock here. So any questions so far? Something you probably want to ask right now. So where you want to say this is a little unfortunate now. So the short play obviously is playing out very quickly, as you can see, 32. So like dropping $1 within seconds. But that doesn't necessarily mean that the stock is over for us. This also now, since we have the pre-market lows here, there's now also a very interesting idea coming to my mind. Even if we don't play the momentum here, it's not that we're selling off and there's no buyers coming in. Rather, sooner or later, there will be kind of a bounce. If we then hold below the pre-market lows, which means around 32 and below the volume weighted average price, this is exactly the scenario, even though I have to adapt the levels here, drive below and holds and below volume weighted average price. This is the first scenario. Then you want to see a tight consolidation occurring, even though probably we don't get to see it right now in this event, but just to keep this in mind. And we're probably seeing shallow pull-ins, which means you see strong selling into the drops lower. And once we bounce, the buyers are not really taking control, but it's like dropping volume once you see the pops back to 32. That's also a potential scenario we could have on our radar, let's say. And so yeah, that's in fact it. So any questions? Any questions from your end? What you like us to cover here? Because here we have now to be patient. We have to wait for our spot. The plan we have it on our radar. We know what we want to see. And now let's just see if things develop that way or they don't. So by the way, now we can see here. So now there's trading taking place. So after 5 minutes, now the liquidity providers say, okay, let's go. And as you can see, so there's this gap higher. But still, we are interested here into the price action we see in this case here on our trading view chart. And if once we see a potential setup playing out, then So now, for example, as you can see, so we're finding some support at 131. If we bounce now, but hold below the lows here, respectively below the volume weighted average price, probably there's a short pop higher, probably to 33, but holding below that level, rolling over again, that could be a sign that that there's another potential test, let's say, of 130 on the downside, and the potential level 31, by the way, potential support, as you can see here, it's our S2. And then, yeah, let's just see how things play out if we get to see that. So again, you don't want to now jump right after, because you can't really control your risk here. You don't really know, especially after that. So obviously the selling is drying up, let's say. So the risk reward, I think, is not as interesting right now as you might see a risk reward being if we closely holding around 133 and about to drop lower, because then we can say, okay, if we now drop 32.70, risking against 33, probably 33.05 or so, you just want to see a drop and follow through on the downside, and don't want to see a spike below and then coming back to and holding above 133. So that's how you can calculate your risk in this regard. Now we could say, well, we're shorting here, but do you really want to short 131 risking against 33? So this is $2, and then going for a potential drive, let's say probably to 129, the S3. So you have a risk reward of 1-to-1, which is not that attractive, and that's something to keep in mind here in this and in this context. By the way, let's just see how the spider and the Qs come in. Oh, that's good. That's good. I mean, well, we haven't seen anything yet, but we are flushing below yesterday's lows, and so far we are not following through. But now pushing back. Let's see if we. I mean, the thing is, when we look at the Qs in this regard, let me just have a look here at the 30-minute chart. Click, and then let's bring in here an EMA 65. So we're trading around that. You don't want to be long. There's a great a technical analyst and trader. I highly recommend reading his books, Anchored VWAP, and also technical analysis of multiple time frames. His name is Brian Shannon, and he's using this EMA 65 and simply saying, well, as long as we are holding below that, or there's no significant close above that, that's probably a better way to put it. Well, you just don't want to be long the stock, respectively, in this case, the Qs. And so we as of now don't have a reason to be long. The same is also true as long as we see a declining EMA 65 here. So this is an EMA 5 on a 5-minute on a daily time frame. But still, the thing is, once we make it back above that level, probably after price action on Monday, breaking above the highs here, around 370, well, probably the picture starts to brighten a little. Once we get to see that, this is something to keep in mind, that we are also, well, I wouldn't say we are extended, but like it makes the impression on me that we are somehow at least good for a bounce. That doesn't mean we're turning bullish again. I think there's clear signs that the former resistance here couldn't be we couldn't close above 37. I think 37, 30, 372. Yeah, 72 around. So based on that, it's not very promising. But to be honest, like I don't, well, to some, I could at least expect a bounce to that level. And now the thing is, we know that TGT, so target in this regard, is consumer discretionary. And by the way, we are trading around, so this is also not very strong. We get to see here, so no bounce against the S2. That's also something to keep in mind, even though the risk reward is still not very favorable. I don't like the trade the stock here around that level from a risk reward perspective. But you have a consumer discretionary here, which means if there's kind of a risk on, however we put this, like bounce in the Qs, well, this is something which is potentially supporting a stock like Target, which is not really adding fuel to the fire for this play on the downside, and definitely something to keep in mind. If we get too bearish, and also adding to the idea that you want to see clear signs also from the overall market for the short side, also from a risk reward perspective, and not just jumping in and saying, well, now we are headed for, let's say, a retest, a gap close, let's say, of yesterday's lows, and then take it from there. I mean, this is not how trading works, but that you see several checks in your favor, let's say, to see a potential play developing, and then taking it from there. So as of now, signs are that we are not that wrong, let's say, with our short thesis. But for a play, I still want to see clearer signs and a better risk reward here before entering a trade. Something else we should look at. Let me just see. Roku is out. Very good decision yesterday. So let me just give you an idea on how I played this yesterday. Very strong stock yesterday, I think, in comparison to the overall market. So Qs were red, -1%. Spider was red, and Roku was performing, I think, quite solid already on Monday. And so you can see also here, I have several of these anchored VWAPs, and I have a, let's say, I think Brian Shannon calls it a handoff in this case on last week on Wednesday. That was a quite extreme move on the downside, and then I saw that was on Monday that we are reclaiming this. And in addition to that, let's probably take out here the after hours. And then also adding here the EMA 65, and then we're making it back above that level. And yesterday, when we were holding, like we flushing initially, that was something I had on my radar to 80, 50, 81 around. And then holding that level while the Qs were making lower lows, I was like, this is kind of a sign of strength. And probably it's good for a play, break up back above 80, 81. Risking against the lows here, and that was, well, worked out nicely, let's say. So immediately took on momentum, and so I kept the position with the target around 86.50, 87. So this is the anchored volume weighted average price from the highs, which we've seen following this squeeze higher on the earnings early this month. So at the beginning of this August. And then into the close, I was holding the position, and the plan was that I take out something like, I wasn't really sure. I was still calculating, let's say 25 to 50%. I didn't want to take the full position overnight, and said, well, I'm potentially closing into the last 10 minutes of trading if we continue to hold higher. And then I see the rollover shortly after 9 p.m. German time, so 1 hour before we close for the day, and that was definitely something I didn't want to see. And I was like, you know what? Take out the whole position, and then take a good resting sleep and reevaluate tomorrow. See whether we can hold the volume weighted average price from yesterday, which comes in around 82.50. Yesterday, I was already I'm aware of that. And as you can see here, so now we're dropping, not like a stone, but it's like that was, to me at least, something was wrong there. That smelled a little fishy, in my opinion. I mean, we've seen the similar thing happening in the Qs, in the spider, having these, let's say, difficult signs, let's say, from the overall market. And I mean, you have a relative strong stock, but no support from the overall market. And then finally, market participants realize, well, probably, even though we sold off quite sharply from the highs we just marked early August, and then dropping 20%, pulling in 20% here within a time span of 2 trading weeks. It was quite solid selling taking place here. Are we really that strong already? And that's the reason why I took off the trade. And as of now, I mean, it's not yet dead, let's say. If we hold above 80, probably this is a good sign, but this is definitely something to keep in mind once you have a position. And that was just a discretionary way to manage the trade. And I'm a very happy guy right now, to be honest. When I'm seeing what I'm currently seeing, because now I would have been out already. So even though it would have been a small gain, it's a way smaller gain, since I would have taken out certainly a 30-50% or something into the close yesterday, and then the rest now potentially breaking even, probably getting stopped on the rest remaining position now with the drop below yesterday's lows. But all in all, I would say that was okay. So I have to review my trading here and ask myself, so what got me, where did the thinking come from? What did I see? What did I feel to some extent? What did I see here yesterday, which led me exiting the trade and reevaluating today and coming to this conclusion. I think this is very important to review. And so again, let's have a look here. Target now bouncing a little. Let's have a look. Still no trade. We're not in a hurry, but there's the bounce. So as I already said, so risk reward wise, you're not jumping or chasing, or in this case, chasing the short side. We get to see the bounce now. We see a first reaction. So this is a 1 minute chart here. Let's see if we hold below 133. What do the Qs do? Holding slightly above volume weighted average price, flushing below the Yo's from yesterday. Sellers couldn't really take over control. Again, target now 32, bouncing. Again, consumer discretionary. This is something which is probably holding it up a little. Let's see if we make it back. I don't want to be long either. So it's not that, don't get me wrong, I don't want to be long the stock here, but I don't want to be short it too. So probably we are facing trouble now around 33. And probably it's good for a quick short play against 33, and then for another retest of 30 on the downside. But I'm not really convinced, to be honest. That would have been a play, probably the momentum play, but the price action wasn't very inviting, let's say. So I hope you learned something. That's it from my end. So no trades today. So I'm focusing now on my play here in VRNS. Again, I think I'm too early. I'm too early, but and this is exactly what I'm talking about here. You can see that. So for trade 30 25 and then bouncing. So this is why I don't want to have the hard stop here. And risking getting stopped on the trades and then seeing that there was no clear sign of a change or something like that. Again, the action level potentially comes in at 31.10. Due to risk of getting slipped here, probably I would work with a buy stop limit if I'd enter there. If I'd add, in my case, again, I think my timing is off. I think this is not really cool, but I'm now managing it and risking against the lows here. And then see if we drop below that level, or if we probably drifting higher based on a bounce. Again, if we see this is not a market stock, but like the Qs dropping and potentially bouncing now while this stock is holding up. This is not a sign of weakness. This is kind of solid. It's like, let's see how now, if we bounce, that's the question. But if we can also gain a little bullish momentum here. If so, I think this is probably a candidate then to at least see a test again of 32, probably 34, 35. However, that's it from my end. I hope you learned something. Happy trading. Watch your stops. Talk to you again next Friday. I'm here again, and I look forward to it. All the best. See you. Bye-bye.